Hey everybody, welcome back to the channel. Today I want to go over the AM Silver Bullet for July 19th. We're going to go candle by candle, so I will be buying or selling down here and managing the trade how I would. And let's get started. Okay, when we first come to the chart here, we're going to scroll back a little bit. We're going to see that buy side liquidity has been taken. Okay, well, you can go back further. There's your buy side right there. It's also taken this. You've also taken this. But the highest right now when we start has been here in the most recent of days. So buy side is being taken. Okay, let me go back here. So we start. It's not 9:30 yet. 9:30 starts and it just skyrockets higher, pushes aggressively higher, and you see a fair value gap right here. Okay, and you have another fair value gap right here. Let's mark that on the chart. Fair value gap right there. Okay, but what else do we see right here? Well, we also see an order block right here. Okay, that's what the blue line is. It's a bullish order block. A price comes down, respects it right there, and starts going higher. Okay, so that's where we're starting the AM Silver Bullet session. And that's where we're at. So let's see what happens here. Alright, so buy side has been taken right there. Yeah, let's keep going. Okay. For me, I'd probably need this right here for a market structure shift. Because this would be the swing low that created the swing high that took out liquidity. So this would be the market structure shift for me on the 1 minute. Okay, well, we get another more buy side taken. So if we were going to reverse, I would now need this swing high to be the market structure shift, because that's what created this swing high that took out this. So this swing low, rather, would need to be the broken aggressively for market structure shift. So yeah, your narrative changes as you're getting more price action. So it was this one, because that was the high. Now this is the newest swing low, and that's the new high. So this would be the next one. I'm not using this small one. I'm using the bigger one. Okay, so let's see what happens here. Okay, alright, well, we have market structure shift right there. Okay, we have a very little fair value gap right there. Now, I know a lot of people would probably take this trade right here. If it comes back in right here, they'd probably take that trade. For me, I don't want to take that trade, because if I took that fib from here high to low, that's in a discount, okay? I would rather it come up here into a premium to go short, right? And then my target, if I was going to get a trade in there, would probably be these lows right here. Would be where I'd be drawing to, okay? So for me, that's not a fair value gap that I would use, because that is in a discount. Let me take that fib off of here. Oh, I didn't take the fib off. I took the fair value gap off. My bad. Sorry. But if you took your, let me put the fib back on here. If you wanted to take an entry on optimal trade entry, how ICT teaches it is if between the 0.62 and the 0.79, there's optimal trade entry, ideally at 0.7.5. So the 70.5, whatever, however you want to say it, that's optimal trade entry, and your stop would have to go one tick above the high. Okay, if you were going to get in right there to go short. Okay. We were still at the high there. Now we got some relatively equal highs right there. See if we can punch through it one more time before we go short. And we don't. Yeah, maybe the next one. Nope. Okay. So there's, yeah, 3 relatively equal highs here. Let me take the fib off here. Relatively equal highs, so those are suspect right there. So let's see what happens. Keep going. Okay. Alright, so now we have a fair value gap right there. Okay. We do have a market structure shift, a second one. Why am I saying a market structure shift, a second one? It didn't take out this high, no. But it's equal to that high. So you could say this is a market structure shift because this is the swing high that created that high. You can also say this is the swing low that created the swing high because they're the same. So you can use either or. Now I'm just using the lower one. That's all I'm doing. And yes, I know technically that would make this a short-term low. This would be the market structure shift, but I'm leaving it because as the narrative played out, things kind of got changed, okay? Here's why I'm not getting into that right there, is because if you took the fib from high to low, that's still in a discount, right? So I need it to come down lower so I can move my fib so that fair value gap is in a premium to go short. That's why I'm not taking this trade right now. So I just didn't want you to think, wait, why aren't you getting in? Well, that's why I'm not getting in. That's what I'm doing in real time. As these things are printing, I'm running my fib and finding out, no, that's still in premium or discount. I'm not taking that trade. And it could go from here and it could go all the way down, and I just missed that trade. That's fine. That's just how it works. That's how trading works. Let's keep going. Hitting that into that order block now. Okay, that's got to be in premium now. Okay, so right there, that puts that in a premium right there. So now, if it comes back in here from there and goes down, I'll take it. Okay. Ideally, I like to see fair value gaps in the optimal trade entry, so I have 2 reasons, like more confluence. But if it gets in here, we'll put it on there, but our stop would have to go up here, up higher over here. So we'll see how it goes. Yeah, that got me in. So I'm selling right there. Okay. We got in right there at the 50% level, right in the middle of that fair value gap. Our stop has to go 1 tick above the first candle of the 3 candle fair value gap setup. So it's going over the first candle, one tick above. We aim for 1 to 2. That's matches the low down here. So my draw on liquidity would be right there. Okay, let me take this fib off because it's distracting me. Okay. So let's see how this goes. My partial, gosh, there's no like area. I mean, you can take a partial here, right around here. I'd probably take a partial right there. So let's just move this to 1. Let's see how this goes. Really close to getting taken out right there. We are 1 tick away from being gone there. That's better. Okay, so I just want to show you why I like the Fibonacci tool. optimal trade entry, I've been using it more and more in my videos and things, is because when you put this on here, leave this on, look at that. If right now this is where we took the trade, right? Using the fair value gap. Okay, but if you went to optimal trade entry, your stop is now here. I'm sorry, your entry is right there, and your stop is now above the high. You are definitely protected. But if you went to optimal trade entry, that's here, which you still got in, and your stop is even lowered, and you're in significant more profit. You know what I'm saying? So, like, I've tested it myself. I like optimal trade entry with a fair value gap personally. But I'm showing you ideally that's how I'd like to see it. But let's keep going here. Let's see what happens. Okay, well, that obviously flattened that. It would have taken us all out up here. Not down here, so that's our trade setup. Let's see how far we go here. Well, Alright. Alright, so where did this go? Well, went to a 5-minute fair value gap and another fair value gap on the 5-minute. That's where it went down right to, and this next wick to the top of this fair value gap on the 5-minute. Alright, so let's recap here. Buy side liquidity was taken. We saw order blocks and other bullish order blocks being respected. If you take this order block right here, it's being respected. You take this order block right here, it's being respected. Order block right here being respected. Now it gets violated here. So now we're looking for a market structure shift. If we don't get one, we get one, but we don't have a fair value gap and a premium to go short. So we continue watching price. Price came down, made another market structure shift based on the relatively equal highs here, left a fair value gap. As soon as it came into it, we didn't take that trade because it was still in a discount. Price came down to the order block here and was respecting that. We pulled our fib from the top to bottom and saw where our optimal trade entries were, and our fair value gap is now in a premium to go short. Price came back up. We took our short there. Now, had we used optimal trade entry or on the higher side of the fair value gap closer to optimal trade entry, we would have had a better trade. However, it still worked out. Just know that your stop needed to go above the first handle or first candle of the 3-candle pattern for the fair value gap, but you're also going to want to make sure that it's above optimal trade entry as it is here by 1 tick. It came back up, bounced around here, and then it just went down and hit our target. Went to a higher time frame PD rate, fill in the 5-minute fair value gaps to the tick on the bottom and then to the top of the second candle, and then it retraced. That is your silver bullet for Wednesday, July 19th, the AM Silver Bullet.